Today, I'm going to go over why a lot of you guys are struggling with consistency when it comes to trading prop firms. And I'm not talking about not being able to pass challenge accounts, because a good amount of people can pass challenges or get funded, but majority of people cannot not only just get payouts, but consistently get payouts without blowing their account from time to time. Let's get straight into the reason why. A lot of people are understanding and not understanding that they have no true edge in the market. Imagine this is your equity curve. Actually, no, let me draw something that's better. Imagine this is your equity curve, which is very unstable as you can see. Imagine this is your equity curve. This is your starting point. All right, this is your equity curve. This is where $0 is. This is where you start on your initial balance in terms of P&L. A lot of you guys are getting payouts, but then blown account, and then maybe you get one or two more payouts, and then you blow the account again, and then maybe this repeats and repeats and repeats. So you think you're profitable because net-wise you're actually profitable, since those payouts cover much more or multiple folds of the cost of a combine and activation. Let's use Top Step for example. Let's say you're trading Top Step. The total for 50K, we'll use 50K since these are the most popular. It's a $50 activation fee plus 150, so basically 200 total to get the count. A lot of you guys are probably getting payouts. I'm gonna assume on a 50K you can easily get 2K in payouts. So let's say you get 2K payout, and then you blow that account, and then maybe you get it again, right? Maybe it takes you 2 tries, nonetheless around $200 anyway, 250 maybe. If it takes you 3 tries, 300, and then you blow it again. And then maybe let's say actually you do get a payout this time of 2K, and then you blow the account, and then you get a 50K account this time, 200 total. But then let's say instead of getting a payout this time, you just blow the account. And sometimes this could be not really linear, because let's say this was two. In this case, let's say you blow 2 accounts, so you lose $400. So net up, you might realize that 2K plus 2K, 4K, nice. And then you guys subtract 400 minus 400, so you're at 4K. If my math is correct, real quick, 4K subtracting. Let me just type this out. You're at 4K subtracting $800 because you have 4 accounts that you basically blown. So if you do the math here, you're actually net 3,200, which this is the leverage that prop firms give you. You can be unprofitable as a trader, but if you're disciplined enough to stick to even edge that doesn't work and have good risk management, you can still come out green trading prop firms. This is why a lot of your favorite gurus, they probably have net positive in terms of profit payouts. However, they're not actually profitable in the long run. They cannot trade this on a personal account, because what happens is if you're on a personal account, you don't get an ROI like 200 in and you potentially getting 2K. Your account starts here. Your entire equity curve is your personal account. And if you're edge $0 or less or negative, you're never gonna actually make money over the long run in a positive direction. You're actually gonna lose money over the long run because you have no edge. Plus frequency, that's even worse. You lose even more money, right? So to help you guys better understand this here, let's say this is your Top Step account. Let's say you pass a challenge here. All right, maybe you're in drawdown, you get a payout here. So this is your 2K payout. And then you blow the account. You go all the way down here, you blow the account. And then you pass again, maybe you get your 2K payout here, you blow the account again. This is what happens. Imagine this is 0 trades and this is at 100 trades. Remember, trading is a law of large numbers and sequencing. So you don't know the sequence of losers and winners of your edge. There could be a time period, maybe this is like January to March, where the first quarter essentially, where your strategy doesn't work in the long run, but it's actually outperforming the market in this stretch here. Maybe you find yourself being net 3.2K payouts here, but then you go to the next 3 months from April to let's say July, and you're net negative here. Maybe you're down 2K net total. Then you start to question your strategy. Does my strategy actually work? And a lot of times, matter of fact, if you've never done enough back testing across either at least 1 year, preferably, to factor in seasonality, at least 1 year, preferably 3 years of back test data, or at least 1,000 trades of back test data. The more data you have, the better. The worse it is. The more volatile your emotions can get, because then you get stuck in a cycle where you realize my strategy doesn't actually work. I'm down 2K. I had an amazing month. Let's say this was like a 12K month here. This is what happens to some of you guys. Maybe you notice your psychology is on point. You're actually sticking to your system perfectly. However, this still happens and you start realizing and you think the market got harder to trade. When in reality, the market didn't get harder to trade. It's just your strategy in the long run doesn't have a positive expectancy. You don't have a positive EV value, hence why you're losing. Even though in this case with prop firms, you can have a positive ROI, like I said, 12K, and you lose only 2K because the ROI here is literally times 10. 2K payout for 200 total, assuming you can get a 2K payout, which is not that hard once you get funded with the 50K account because you have 2K drawdown. So it's just like a 1-to-1 target. Actually, I would say technically a 1-to-2 target because you do have to build buffer for payouts as well. And there's the 50%. Well, basically, there's the 50% rule for Top Step at least. Other firms, there's different rules for different places. I'm not going to be able to memorize every single firm, but it depends on how you trade. But most firms, they have some sort of rule. Either you have to build a buffer and you get 100% of the split, or you get a 50% split like Top Step. So, yeah, there's that. Basically, hopefully you guys do take a lot from today's short little video. It's talking about like understanding, do you have an edge over long run, or are you just going through this cycle and period where you're actually just getting, I wouldn't say lucky, but more so the market's just in your favor that works with your strategy, and then periods where it doesn't. Maybe like you lose AK here and you're like stuck, man, I was doing so good here, how come I don't do good anymore? Well, it's just because market variance is affecting your strategy, and your strategy doesn't work through all types of market conditions and variance. What do you do in that case? You can't blame your psychology. You say your psychology is perfect. Okay, I trust you. Your psychology is perfect. Your discipline is perfect, but you can still end up like this in trading. And then if you think of this as a personal account, forget about prop firms. Well, guess what? You're going to end negative balance. You're going to have negative P&L on your personal account because all this is tied together. Just not split up where you can cash out 2K and only spend 200. That's only a prop firm really thing. No other places can really provide that type of value in ROI. So if you do want like a higher ROI, go with prop firms. I do have some recommended prop firms in a link down below in my link tree if you want to check out which prop firms are reliable and trustworthy that I've gotten payouts from. Otherwise, make your own decisions. And yeah, hopefully this video helps you guys out, man. Opens your eyes to understanding and ask yourself, backtest first. Do you have a true edge over long run? If yes, you don't need to worry about this. This is fine. Because guess what? You're going to be positive here, and you're going to be positive most likely here as well. As long as you stick to your system and be disciplined. However, discipline is not going to save a negative strategy that doesn't work across the entire year. Because no matter how good your discipline is, you're not going to be able to overcome market variance in extreme drawdowns. Actually, more than extreme drawdowns. This is not normal drawdown because it's a strategy that doesn't work. The end result here is like, let's say negative 1K. And starting at 0 over a year. This is not good. This is not being in the market. You need an edge that makes you at least, I'd say, 2 to 3% a month. If it doesn't make way more than 2 to 3% a month, your strategy, your day trading strategy, there's no point in trading it because you can invest in things like QQQ, TQQQ. These can make you 30% annually. All right. Now, granted, tech has been booming the past few decades, so hence why these have given such bigger returns. But even if you invest in stocks, depending on what stocks you buy, all right, even the main popular ones that are known that everyone buying, pretty straightforward, Microsoft and not Intel. Intel's not that good right now. Near the AMD, Nvidia, Meta. You guys, everyone talks about these stocks. They're hot stocks, and just follow the trend. They will give you better returns than if you were just to make 2 to 3% day trading a month. So this is why you need to focus on making high risk reward and ending with net risk reward every single month. Otherwise, it's not worth your time to be trading manually, because with manual trading comes not just time. That's not an issue for most people because trading, I'm really not on the charts for too long. 3 hours a day, usually max time. So we're not going to factor in time. But the main thing is really mental capacity. You're a lot more stressed. It's more stressful than a job. Trust me, especially when you start initially going full time, it's going to be much more difficult on your brain, because you're so used to making money every day instead of having to accept losing money on certain days. You can never win on every single day. There's going to be red days, and you just have to sit there and accept that you lost money. That's it. If you can't accept that, you're never going to be able to make this as a full-time career. Hope you guys do enjoy today's little video, man. I shall catch you guys in the Discord if you're not in the free Discord. And if you guys want to learn about my strategy that has a proven edge over the long run, along with all my student results and testimonials that got on payouts, got amazing backtest results at 50% win rate at 3 to 3 risk reward or 3 risk reward average, click the link down below to apply for the one-on-one mentorship. There's only one spot left. And if you just want to learn the system at a self-paced system, then again, check out the 100 course down below. See you guys in the next video. Peace.